Tesla stock is barely in the green today for a very specific reason. We got some bad news. Jefferies has cut its Tesla price target to $210 from $250 per share. But after all, this makes you question the validity of this report that we're going to go over, because Jefferies is over 200,000 shares short of Tesla common stock. This is definitely a conflict of interest, to say the very least. This report from Jefferies is just off the wall ridiculous, saying that Tesla should cancel the Cybertruck. In fact, they are urging Tesla to cancel the Cybertruck because Tesla, quote, looks stuck in a slow lane for another 12 to 18 months. Philip Hoychis cut the price target to $210 per share on Tesla stock, as 2024 is, quote, already a lost year for growth. The price target cut reflects reduced earnings and free cash flow estimates. The analyst urges that Tesla looks stuck in a slow lane for another 12 to 18 months, unable to capitalize on peer delays while European legacy OEMs launch a 25,000 euro EV next year and Chinese automakers set a new pace of shorter product cycles. Quote, we appreciate future value from FSD, including licensing or Optimus, but not as near-term substitutes to solid core performance. As BEV penetration continues to grow rapidly, one of Tesla's long-term edges is to remain one of a handful of global low-cost producers, along with BYD, Stellantis, and Toyota, Hoychis wrote in a note. The analyst believes that Tesla canceling the Cybertruck would probably be positive for shares. With 2024 already a lost year for growth, it would help Tesla refocus on an edge that was built on simplicity, scale, and speed. To one point, this analyst is correct. If Tesla were to delay the Cybertruck 12 months ago, when the markets were solely focused on near-term profitability, that probably would have been positive for Tesla stock, but not right now. That is absolutely asinine to say that Tesla should cancel the Cybertruck and that would be positive for Tesla's share price. Absolutely not. That's just 100% false. This analyst obviously does not understand. The markets are now pricing in 4 rate cuts for 2024. And based on what we heard from Treasury Secretary Janet Yellen today, it looks like we're probably going to get even more rate cuts than that. When rates go lower, long-term valuations become more attractive. If you can get 5% on a 10-year Treasury bond for 10 years, that's 50% over the course of 10 years, why would you make a speculation on any small, mid-cap, interest rate sensitive company? You wouldn't do that. When rates go lower, it makes long-term investing more attractive in equities. So this analyst is just far from logical at this point. And yet again, another analyst does not realize with rates going lower, Tesla will raise prices. It's clear they're already doing that in China, as China's treasuries have been falling. Our treasuries have started to fall. 10-year treasury went from 5% towards the end of October, now to under 4.5%. Tesla pretty soon is going to start raising prices here in the US because the monthly payment will stay roughly about the same. This is incredibly bullish if you are bullish on Tesla stock, because the simple fact of the matter, if this is how your sell-side analysts are rating Tesla and thinking about Tesla in 2024, they are going to be so far proven wrong in 2024. It's going to be ridiculous, and you are going to make a whole hell of a lot of money. This report goes on to say that instead of spending significant resources on the Cybertruck ramp, the management should focus on a high-volume global segments and supply of 4680 cells for the Model Y. Well, it's a little too late for that. They've already put a lot of money into the Cybertruck launch and what is going to be the ramp. They're not launching the Cybertruck to produce 10 of these a month. They're already in the process of ramping the Cybertruck, thus the hundreds of gigacastings we have seen outside of Giga Texas. So it's a little too late for that, buddy. Quote, allocating capital to support residuals would be a better use than the Cybertruck. The bottom line here is this is probably one of the most far-fetched pieces I have heard for Tesla, and it really just shows you how out of tune your analysts are with Tesla stock. Maybe they're just super short in Tesla. That would make sense why they're coming out with this report. Because if you are really an analyst and you're putting out this false of a narrative on a stock that you cover, you should be fired instantly. I'm just some guy that is making videos on his computer and can see that this report is full of BS. It makes no sense. If you even remotely stay up to date with Tesla, you should have better insight and better information than this report. All in all, this is going to make you a lot of money. These kind of reports lower the expectations heading into 2024. And then what happens? Tesla raises prices. The launch of the Cybertruck goes better than expected. The average selling price for the Tesla franchise increases due to the Cybertruck being priced higher than the Model 3 or the Model Y. And also Tesla raising prices. You're going to have better margins in 2024. You're going to have better demand in 2024 via rate cuts that we're now expecting 4 to 5 rate cuts. And just a better bottom line overall. I mean, what's there not to like here? If you get a licensing deal for FSD, if you get any of these other kind of Hail Mary bets for Tesla that actually follow through in 2024, that's just the cherry on top. That's the, sprinkles on top of the sundae, if you will. You've already got the damn sundae. It's lined up in front of us via some of these analyst opinions. The last thing you want is super high expectations heading into a new year, heading into an earnings report, kind of like NVIDIA. Super high expectations, even if they beat those super high expectations, still might not be enough. And that's something we need to be watching for coming on Tuesday. If you like the insight provided to you thus far in this video, hit that like button as well as subscribe to the channel. Especially when a lot of people subscribe on a certain video, it tends to get pushed out to even more people. And I think everyone needs to hear this information. Let's go ahead and get into the rest of your Tesla stock news and what Janet Yellen just said that has me thinking maybe we get a lot more rate cuts than what we're currently pricing in. See, the markets as of today are pricing in an over 5% chance that we get our first rate cut in December. That's absolutely insane to think about this logically. Back a month ago, we were not expecting the first rate cut until at least July, and we were only pricing in 2 rate cuts for 2024. Now we're pricing in, let's see, 1, 2, 3, at least 3, borderline 4 rate cuts for 2024. 6 rate cuts is priced in by about a 10% probability. So you could see 6, 7 rate cuts, in my opinion, in 2024 based on what Janet Yellen just said today. Janet Yellen says high food and rent prices are key factors in voters' negative economic outlook. Treasury Secretary Janet Yellen pointed to consistently higher prices that Americans pay for food and rent versus pre-pandemic levels as a major factor driving voters' negative outlook on the economy. We're making considerable progress in bringing inflation down, but Americans do notice higher prices from what they used to be accustomed to. As President Joe Biden runs for re-election, the disparity between what the White House sees as considerable progress and what voters experience could be a major factor in the race. According to an NBC News poll, which is very left-leaning, nearly 60% of registered voters disapprove of Biden's handling of the economy, while only 38% approve, according to the most recent NBC News poll released on Sunday. The numbers were in line with other polls that show large majorities of voters would rate the present U.S. economy as poor or fair despite historic levels of job growth. Yellen hewed to this topic on Monday. Quote, "It's our job to explain to Americans what President Biden has done to improve the economy," she told CNBC. "I think as inflation comes down, prices stop rising, and the labor market remains strong, Americans will begin to see that we have made meaningful progress." This is, It's like the definition of insanity, right? You keep saying the same things, you keep doing the same things, expecting different results. As you get into 2024, as these polls look incredibly worse and worse, as there is this huge disparity, people have jobs, they can't afford to live. Everything's too expensive. Ask anyone out there. Maybe you guys are in a better position than the average Joe because you're watching videos on the stock market. So maybe you guys are the wrong audience for this. But if you ask your everyday American, yeah, they're not happy with the current cost of living. They don't understand that inflation is cumulative, right? It doesn't come down. People want prices to come down. The only thing that they can do to try to save their butts, okay, we'll try to keep it PG-13, is lower rates. Make it affordable to buy a house again. Make it so you can sell your house and buy a new house. There's a lot of people that want to move. There's a lot of people that want to upgrade houses, but they don't want to double their monthly payment. I bought a house, right? The one I currently live in. $600 a month. That was back in 2021 when rates were 2%. This new house that I'm buying is $2,000 a month, and it's only double the price. So your mortgage it's way higher today. Do you think average Americans like that? No. They vote with their pocketbook. This is good news if you are an investor in our markets, because that means with almost a certainty, this election will give you more rate cuts, and that's the important part. And I would argue this interview with Janet Yellen is part of the reason why you're now pricing in a 5% chance for a rate cut in December, as well as a 5% chance of a rate cut in January as well. Now, March, there's a 31.5% chance of a rate cut. You're still technically pricing in a pause. And then May, you're actually pricing in your first rate cut with a 45.5% probability. There's a 13.9% chance of 2 rate cuts by May, and a 39.2% chance that we continue to stay paused. So May is when you're expecting your first rate cut. But let me tell you right now, if durable goods orders come in really bad coming on Wednesday, if you get more, if you will, worsening economic data, you're going to start pricing in a lot more rate cuts, and maybe even as soon as January. This is also a pretty negative blow to Cruise as well as Tesla today. Breaking news, the CEO of Cruise has resigned. He founded Cruise over 10 years ago. He says, quote, "I plan to spend time with my family and explore some new ideas. Thanks for the great ride." This is the closest thing to outright confirming Cruise is not going to be operating robotaxis for the foreseeable future. This is a big setback for Tesla as well. It's going to make the hurdle for Tesla robotaxis more difficult, getting through regulatory bodies. There's going to be more scrutiny on robotaxis in general, and it's just not great for Tesla. For the first time ever, the Cybertruck is currently on display in San Diego in the Westfield UTC Mall. And according to some reports, it appears that Tesla's putting Cybertrucks in various different showrooms throughout the US. Tesla did release some new photos of the Model 3 Highland just to show it off yet again. I think that's a pretty cool photo myself, but looking absolutely gorgeous. And I guess it's only a matter of time before we can get our hands on one over here in the US and some parts of Europe. Still, no word on when we're going to get the new Model 3. And look at that. Piper Sandler analyst Alexander Potter has raised his Tesla price target to $295 per share from $290 per share while maintaining an overweight rating. Alexandra asks on X, is Jefferies still holding their short position? On September 30th, 2023, they reported 206,000 puts in their SEC filing, no calls or even shares to report in Tesla. Besides this put position, they were also very short back in November of 2022. It looks like September, October, November, which probably paid out pretty well. And they're looking at this now and saying, hey, maybe we should put out this false report, creating some kind of false narrative to help out our puts. after we've recently got smoked on them as Teslas went from the 190s back up to the 240s. So hey, it makes a lot of sense. They're losing on their position. They make a false report. They try to push down Tesla stock. It does not look like it is working today. Wall Street is a pretty efficient marketplace. We all have the same information, relatively speaking. It looks like a lot of people are calling this report for what it is. A bunch of BS. Sam Altman will not return as CEO of OpenAI. And that's because the ousted OpenAI head, Sam Altman, will lead Microsoft's new AI team. After all, it looks like a sweet deal for Sam Altman. It almost looks like OpenAI's board went straight Hollywood with their recent $80 billion valuation they were given. This post from Sawyer Merritt says, wow, so Mira, OpenAI's interim CEO, planned to bring back Sam and Greg. The board basically said F that and ghosted everyone, and then found their own new CEO, Emmett Shear. Microsoft is pissed. A lot of OpenAI employees are expected to quit. More than 65% of the company, believe it or not, of OpenAI employees have threatened to leave if the current board doesn't resign and reinstate former CEO Sam Altman and former president Greg Brockman. I was really hoping some of this AI talent made its way to XAI or Tesla, because that's a lot of talent up for grabs, and that's really what is powerful, is your talent. We have even more bad news for Cruise. Co-founder and chief product officer Daniel Kahn just resigned a day after Cruise CEO Kyle Vogt quit. The situation seems like it's getting worse by the day for Cruise, which is ultimately, again, bad news for Tesla. Tesla has a new advertisement at their San Diego store that says the Cybertruck has an SMC sheet molded composite bed, 11,000 pound tow rating, and 2,500 pound payload rating, designed to be the world's toughest truck. Tesla Energy says they are excited to be working with Ayer Gavu to bring Tesla electric to homes across Australia in 2024, connecting solar panels, power walls, and EVs to share clean energy and reduce energy prices. EV startup Fisker has lost its second chief accounting officer in less than a month. Fisker will now try and find its third COA in just the last month. Roland Percher says small markets for Tesla are growing about 200%, while bigger markets like Germany and the UK are up only 30%, which only 30% is by far the fastest growing automaker at the sheer size and scale that Tesla is at. There's nobody that can compete with those numbers. Mars Catalog wrote on X, OpenAI is slowing down. XAI is speeding up. Elon Musk responded and said XAI is burning the 4 a.m. oil. LFG stands for let's effing go. So Elon Musk is definitely excited by this drama that OpenAI is currently experiencing. Tesla global inventory numbers continue to be on the decline for the Model S and the Model X. The Model 3 is staying pretty much the same as yesterday, but the Model Y is actually falling a little bit. That's probably good news because the Model Y has been elevated recently and your other models have not been. Google Trends data continues to show a sharp uptick in search trend activity for the Cybertruck, and that's not surprising considering we're getting more news by the day about the Cybertruck. Heading into November 30th, I would expect nothing less. And I think especially once this starts to get covered on mainstream media, local news, world news, everyone's going to be talking about the Cybertruck. Dwayne Johnson, The Rock, didn't even know Tesla was coming out with a Cybertruck. Just imagine when the world finds out. Yeah, that's going to be a huge halo effect. Something apparently Jefferies did not consider in their report put out today. Tesla continues to run about 300 different ads globally. The percentage of stocks above their 50-day moving average is at about 63% today. Back in July, this hit a high of 77%. this suggests there could be a lot more upside from here. Your treasury yields are falling about 2 basis points following a successful 20-year bond auction that showed good demand that dropped yields for that specific bond auction. That did translate into the 10-year treasury falling as well, and that is also causing this end of the day rally that we are currently experiencing. A matter of fact, the Nasdaq is up 1.17% at the time of recording this video. This is your highest level since January of 2022. You are very close to breaking out to a new all-time high. The difference is this rally is a lot more broad-based than what you've seen in July or even what you've seen back in January of 2021. A lot of your small mid-cap stocks were actually on the decline when you were hitting new all-time highs. So this is pretty encouraging, and I do think the majority of this rally is simply put due to a dovish Fed, decent earnings so far from all the companies we've heard. Maybe NVIDIA will change that story, but so far so good for earnings season. The data has been coming in Goldilocks, not showing a recession, but showing basically cratering inflation, and the market's pricing in lower rates to come. This is your Goldilocks scenario. That's why I have been bullish. Now, if you look at this chart just abstractly, right, neither being bullish or bearish, just as a pre-reference, I mean, you have a cup and handle formation that is fully formed. When you broke this to the upside, this day right back here on November 7th, I said the markets could hit new all-time highs. That was on November 7th when the Nasdaq was around 372. You have rallied about 5% since then, since I made that call just less than 2 weeks ago. We were right again. It's simple to see. Tactically, you have to be bullish right now. There is absolutely no reason, in my personal opinion, stocks are coming down from here until we get some kind of very recessionary data. Could be Wednesday with the durable goods. You never know. But until that happens, stocks are not coming down. You're way too underallocated to stocks as a hedge fund manager since the Fed has been raising rates like crazy over the past 2 years. You're just, there's no case for lower stock prices from here. There's a lot of money on the sidelines that is not participating in this market. For Tesla stock, I believe Tesla would have otherwise been up a lot today if it was not for this price target downgrade. Some of this bad news that we're getting out of Cruise, Tesla stock probably would have been up 3 to 4% today. You're up less than half of 1%, around a half of 1% currently, and you're really fighting here between your 50-day moving average as resistance and your 200-day moving average as support. You actually held the gap level that you see in this gap on November 13th to the upside. You're holding this, but you're going to find resistance around that 50-day moving average. If you break out above that, then you're looking at a Tesla's stock price over 250. And I think by the end of this week, come Friday, Tesla stock's probably going to be over 250. That was my price prediction last night on Sunday. We'll see what ultimately happens. I'm not a financial advisor. I'm not a financial planner. But if you look at things like the RSI, that is at 54.5. I mean, not even close to 70. You're basically neutral. If the markets continue to go higher from here, you're probably going to see Tesla follow suit and then outperform as market participants realize rates are going lower. We want to be bullish on Tesla. So that is going to do it for this video. We covered a lot in a very short amount of time. Stay tuned to the channel for that video coming out around 8:30, 9 p.m. tonight, because let me tell you right now, Tesla, as far as option activity, seen 300 times more dollars bought today in Tesla options than what you seen last Friday. It's actually ridiculous. So we need to go over that because what in the world just happened today? I hope you guys are ready for that video. I hope you guys learned something here from this video or like the perspective. If you do, and if you did, hit that like button as well as subscribe to the channel. If you guys want to take it a step further and come trade with us live in real time, I send out all of the alerts every time I do make a trade. Link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.